Alrighty, welcome. This is the weekend video. This is Enda here from bullwebs.org, and you already know that. I'm going to give a wrap up of the week that has been, and we'll see where we stand. Okay, so this is a bit of perspective on Eurodollar. I mean, we've come down off the recent high. Hasn't been by a huge amount though. 123 something was the high, 123.40, 116. So we fell 700 points, 650 points, and we have a rebound underway. I just wanted to show this daily count as a kind of a refocus for me because, and maybe everybody, that I'm tracking a long-term triangle. So this price action is probably, this price action to nowhere is probably going to go on for another long period of time, possibly, towards the end of this year, as we get through wave D and E, if this continues to be a triangle in wave B. So we have 3 waves down in A. I think we'll probably get 3 waves up in B pretty soon, and then we'll get most likely a 5-wave decline in wave C. So you can see where I'm coming from, that I don't think this decline in wave D is done at this recent high. It just doesn't seem enough to kind of satisfy the previous moves within the triangle. So that is daily count. Let's get on to the 4-hour count here. You can see we've most likely got 3 waves down in wave A, and then a 3-wave rally. Well, at the moment it's hard to call, but I'm running with a 3-wave rally in wave B. We seem to have retraced. We're nigh on 50% retracement now. We did break this little shelf on the left here at 119.90, so it was a 120 shelf of resistance there. But yeah, I'm still in the camp that this is a B wave, and we'll probably get a decline into a C wave. Let's get into the hourly count here. Here you can see the whole rally in wave B. You can see a wave B in blue here. I'm looking at 3 waves up in A, and then a triangle B wave. So you can see 1, 2, 3, 4, 5 in wave B. And then we've got a rally to a very slight lower high this morning. I was unsure what was happening over the last couple of days here. It did look more corrective last night, and we had this. We seemed to have filled this trend channel overnight, and we rallied off that. So it seems like a 4th wave, most likely a flat. So we've got 3, 3, 5. So this is probably a 4th wave within wave C. So we've got 1, 2, 3, a flat 4th, and then a rally into wave 5. Now the only problem I have with this count is depending on where you choose wave, the top of wave 1 as. And that, well, I suppose we could still call this wave 1 down here. We could have, actually, yeah, wave 1, 2, and then in wave 3, maybe 1, 2, 3, a very small triangle 4 and 5, maybe. Depending on where you choose wave 1, then we may have an invalidation with a break of the wave 4 and 1 high. So if I chose wave 1 up here, there's been a very small break of the wave 1 and wave 4 high and low, I mean. So that shouldn't happen. Anyway, the longer term pattern I think still stands as I showed you there earlier. The alternate for wave B is still a very real possibility. So it could be 3 waves up in A, 3 waves down in B, and then 5 waves up in C, and we could just go sideways again for another, I don't know, month or so before we make any progress down in wave C. I think suffice to say that Eurodollar has all but completed 3 waves up, and we should at least see a 3-wave decline within the alternate count to the downside. If it's the main wave count, then we will see a 5-wave decline into wave C. So that's kind of where my head is at the moment in Eurodollar. Similar story in cable, because I still think cable is still operating within a triangle, and we are going down in 3 waves within wave D. is the 4-hour count here in pound dollar. So we've got 3 waves down, 3 waves up, and we should get 5 waves down in wave C. So the hourly count, you've got here you go, 3 waves down in A, 3 up in B, and then so far, again, we've got a little violation there. If this is a 4th wave high that's in today, or this morning, earlier on this morning, then we've got a violation of wave 4 and wave 1. Now this could still happen within a leading wedge, so this could still be a leading wedge pattern of 5 waves down. If it's an impulsive wedge, wave 4 and wave 1 will overlap, and you'll still get that kind of, let's say, overall wedge format down into a wave 1. This could be a series of 1-2, so it could be 1-2, 1-2. If that's the case, then we will head, sooner rather than later, we'll head down into wave 3, and we'll probably accelerate into wave 3 pretty soon. I still favor that we've got the B wave high in place. Now, we didn't get a break of this A wave low yet, so I would like to see a break of that at 138. That 138 handle, I would like to see a break before this wave 1 is completed, and then we correct in wave 2. So let's see. A possibility of a wedge down in wave 1, a possibility of a series of 1-2s down. In either case, we should see this wave 2 high here at 139.47. That should hold for today, and then we should head lower again. So 3 waves up in B is done. I think we'll head down in 5 waves in C beginning next. Well, if it's not beginning already, it'll be beginning next week. And I'm watching that wave A high there, that 138 handle for a break to confirm the decline. Okay, dollar yen. Now here is an interesting count in dollar yen, because the alternate count here, I have it inside a red square there, so I should get rid of some of these. First of all, we declined. It still counts as the 4th wave. Let's start with brass tacks here. It still counts as the 4th wave. We've got 3 waves down, I think, more or less complete. A little spike lower this morning, but I think that'll probably give way pretty soon. We've got 1, 2, and a possible 5 wave pattern up in wave 3. So we've got 1, 2, 3, 4, and 5 in wave 3, and then this could still counts as wave 4. There's nothing that has happened in the last week that invalidates this count. The only thing I'm looking at is that we've broken the 38% retracement of the whole rally, and with this morning's little spike lower, we're heading towards that 50% retracement. If we make 50%, if we make that 50% retracement level, I think we could probably switch to this alternate count here. So you could go 1, 2, 1, 2, 3, and small 4th wave and a little 5th wave up in wave 3, and then a 4 and a 5 to complete a whole 5 wave pattern up in wave 1. And then that would bring this the size of this correction more in line with what you might expect. So at the moment, we're kind of mismatched between the size of wave 4 and the size of wave 2. So I'm giving some heed to this alternate 1-2 pattern, which still suggests that we get another rally ahead of us. But for the moment, we still need to see this bottom come in and then a rally begin off that. So let's get to the hourly count here, and I'll show you where my head is at this morning, or this afternoon actually. It's nearly 2 o'clock here in Ireland, so the market is well underway in the States. So we got a spike out of the open, spike lower out of the open in the States. That happens quite regularly actually. So we'll see how that kind of how that plays out throughout the rest of the day. I'm still looking at 3 waves down in A. This small retracement here in wave B was always troublesome to me, but since then we've had a wave 1, 2. Now I'm looking at this as an extended wave 3, wave 4, and then maybe an ending wedge in wave 5. So it could be wave 1, 2, 3, 4, and 5. We'll see how that plays out today. So this spike lower would be within a third of a fifth, and then we'd get a retracement and then another decline. We're just hugging that lower trend line here of the trend channel. So it's an Elliott channel. So the top of the initial move connected to wave B, and that's sprung off the wave A low. So we're encompassing the whole pattern. It's an Elliott channel encompasses the pattern rather than the price action. So a normal price channel, you would encompass the whole price action, no matter what the degree of the wave is, and that'd be a normal price channel. Within the normal price channel, you can see that we may have a little bit more down to go. That can still happen in a fourth and a fifth wave, and then we find some sort of bottom either later today or on Monday, and then we head higher into a first wave up. And this would be either wave 1 of 5 or wave 1 of 3. So we'll see how that goes, depending on the larger alternate count that I showed you there a few minutes ago. Okay, it'd still be reasonable to look at this triangle formation here as an initial target, so 108.90. If we break above 108.90, I think that'll be this correction done, and we can work higher for the longer term. Okay, so let's move on. This is the stock market. A bit of a flat week this week. It hasn't been incredibly impulsive to the downside. It hasn't been, you know, it hasn't swung either way just yet. In the 4-hour count here, you can see that this ending diagonal that I've been working with for a long time, the price has moved back down into this channel, this wedge. So first of all, that's at least what you would expect. I do like the fact that we had a little throw over in a possible fifth wave, and then we came down into the channel, and then we found resistance at the down into the wedge, and then we found resistance at the upper line of the wedge again. And we've fallen into the data. It means nothing in terms of the wave count. It means nothing in terms of the let's say the price action. It just means that we've, in the short term at least, this upper line turned into a resistance as a pattern was forming to the downside, rather than a resistance as a pattern was working to the upside. So this upper line has formed resistance to this fifth wave ever since, let's say, the 4th of this month. So for the last, let's say, 20 days, the price worked up along, then created a throw over, and now we're working back below again. Like I said, it's nothing. It's no major signal or anything, but it's just an interesting, I think, initial point to work from. Let's see how we are standing in the shorter term pattern here. So let's get into the hourly. Well, no, should I go to the daily chart? Well, yes, I should go to the daily chart. Okay, so I showed you some charts this week about the level of what was it last night? The excessive number, the record high of stocks that were trading above the 200 DMA. So we are now at a point stalling in the pattern at a record high in stocks trading above the 200 DMA. So this is kind of, if you're looking for an indication of a, how would you say, a mania, there you go. That's that is one heck of a feat to maintain. In terms of the longer term, the internals that the market is, it's still, not only the fact that we are sitting at an all-time high, but we're sitting at such a kind of a brittle all-time high that the internals are still suggesting that we could have a very like what we had last February. We could have a very sharp initial move lower as some sort of a trapdoor kind of moment. You can see what happened in February last year when we were we just barely started climbing to make new highs. The trapdoor just opened and we plunged. What was it initially? It was about 5,000 points. So that was one heck of an initial plunge to the downside. That's a trapdoor moment. We're set up for something particularly similar right now, and I think it could easily be of a similar magnitude because of the brittle nature of the market. Also, we haven't got we have two, let's say, short-term pivot low here back in January, 28th January, late January, we have a short-term pivot low, and we have that previous 2020 high coming in at the same point. So we have pivot high and pivot low in the same area, and an initial move lower would bring us down, let's say a 5,000 point drop would bring us down to this B wave high and pivot low there. So yeah, I think that's longer term. That's what I'm looking at. This is a trapdoor moment. This is set up for a trapdoor moment. So let's see how that plays out. Let's get my label back into place there. You can see also that we have a pretty a pretty stretched moving average distance here. So we have a declining all the way along this rally ever since last May, is it? Early last June, we've had declining MACD. Okay, so we've been kind of humming along around that overbought level, but we have again a decline, a divergence, basically in the long-term pattern. A very stretched moving average distance there. So at this point in time, we are like supremely primely placed for anything to come and just pull the rug out from under the market. So, and it could be something very, very small that will do it too, or just a completely giving up the ghost in terms of sentiment. So, and I haven't even mentioned sentiment. Sentiment is at all-time record highs as well. So here we are. Let's get down into the short-term chart, and we'll see what this has been telling us this week. So this is how would I say, a bit speculative in terms of pattern, because you could easily read this as a three-wave pattern lower. Now this is like I've always said, this is a derivative chart, so the actual cash chart might be a little different. We do have a little bit of a short-term lower high coming in, and a reasonable spike lower yesterday. Let's see how today's trade goes. If we start breaking below the previous low here, so that's 33,680, and I might draw attention to this kind of band of support here. Again, we've got a kind of a spike pivot high there in a wave 3, so we've got a 33,225 and a B wave low here within the recent pattern, so that's 2960, call it. So we've got a band of support here, which should be broken within the first initial 5-wave move lower. Is the trapdoor going to open? I sure hope so. Hey, because this market needs to die. It's just froth and lies and fraud. And that's what's here. That's where we are. In general, in life, we're in froth and lies and fraud. That is the, the dream, Western dream right now. Okay, I don't say that with a smile on my face either. Okay, let's move on. Let's see, can we get a trapdoor moment next week in the Dow stocks in general? Let's move on to gold. You can see here that I have introduced the alternate account that I was talking about. That involves wave C here already complete. So wave C and 4 already complete. I haven't tipped my hat towards that just yet, because I just don't. I feel it in my waters, as they say. I feel it in my waters that there is a test coming of that kind of recent wave 3 low, so that kind of 1670 area again. And if it comes, I think then we'll be in a much better position to kind of just to start looking much higher in gold. In terms of the short-term pattern, I'm calling this pretty much a 4th wave top, even if this is a wedge rather than a simple impulse wave. So it could be an ending wedge as well. So let's not lose sight of that. The alternate account does suggest that maybe we've already turned. even in the case of this alternate count, if I was to go full bullish now, I would say that we are more than overdue a correction, and it'll probably be a correction back towards that 1720 level again. If it's coming anyway. If it is a decline in a corrective manner back towards 1700, let's say, and we do create an inverse head and shoulders type of pattern here, then I'm all in. But I still think we need a decline to come our way in this one to set up a little bit better. Here's the hourly chart in gold. You can see that I've reverted back to that kind of 333 pattern. The thing I don't like about the alternate count here is that we've got it's a failed double, it's a failed break, first of all, so which would mean that this alternate fifth wave here would be a failed fifth wave. Possible, and that still doesn't rule out the fact that we've got a pretty reasonable three-wave pattern up off that low. So I'm going with the 333 fourth wave, and with the expectation that we still have this fifth wave to come. It hasn't come our way yet, but I am kind of cap in hand at the moment, looking for that to happen. And even if it doesn't, even if the alternate count is more fitting, we should get at least a correction in three waves down towards this B wave low here, 1722. So what's the 1722 level next week? Okay, let's get into crude oil. The action that the count that I'm working with is a 5-wave decline, a 3-wave rally, and then maybe the beginning of third wave this week. We'll see pretty soon on that one. The hourly count here shows you our 5 waves down, 1, 2, 3, 4, 5, and then 3 up in A, triangle B, and then 1, 2, 3, 4, 5 in C. So we've got a 3, triangle, 5, fill trend channel. We just broke above the 62% retracement level, and then we headed lower quite impulsively back into the mid-range here again. So interestingly, we're back into that supportive mid-range there in the price action. Today, do we get to decline into a third wave? Possible. Possible. Very, maybe even probable. We seem to have a corrective lower high in place. Maybe that's wave 2 complete. We can always create a larger wave 2. Just don't know yet. If we break below $60 again, I think we could probably suggest that wave 3 is underway. So that'd be a third of a third. So the potential for the downside is glaringly possible again. So let's get into the S&P, the 4-hour S&P. Again, we have a slightly different variation of the ending diagonal, but I don't think this counts in any other way, especially in the S&Ps, because we've got so much overlap between, let's say, that 3980 level and even down to 3590. So, almost 400 points of complete, continuous overlap within the pattern. If that was, it is me. I was going to say if it's me. It is me that is saying that it's very hard to count that move. If this was an impulsive pattern that was developing, it would be very hard to count this as a 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, 1, 2, and now a 1, 2. So is that 8? Is that 8? A series of 8 1, 2 patterns? Me no think so. So anyway, I'm still working with that ending diagonal. So we've got, I'm showing the extents here of the ending diagonal. We've got wave 3 up in 1, 3 down in 2, 3 up in 3, 3 down in 4, and then 3 up in 5. We're kind of hugging that upper trend line again. So you can see the extents within wave 1, the extent within wave 3. Very possible small head and shoulders here. And you can see here a larger left shoulder head. Maybe we build a right shoulder again, and then we head down. Let's get into the hourly count. For the moment, we're stuck within a sideways trend channel. If we break below this trend channel, then I think we have something to work with. For the moment, just calling it a wait and see. We need some confirming price action to the downside in order to get working seriously in a bearish pattern. So let's see if that comes our way next week. Here is silver 4 hour. I switched to an alternate silver count, so we've got 5 waves down in a wedge in wave A, 3 waves up in wave B, and we need 5 waves down in wave C. That hasn't happened yet, but still, notwithstanding that it hasn't happened yet, it don't mean it ain't going to happen. So we've got the hourly count here in silver. We are still sitting below the 50% retracement level. So, there's a possibility that we hit that 50% before heading lower into wave C. So wave B is still provisionally at 2663. That is a double top at the moment. So you can see here this previous 4th wave and the high this week do come in at more or less to the pip, more or less to the penny, exactly equal. So it is yet to be seen whether we get an impulsive pattern off that high. We've got a zigzag in place. So we've got 5 up in A, 3 down in B, and then 1, 2, 3, triangle 4, 5. So 5, 3, 5. Wave B has retraced close to the 50% retracement level. Let's see how that develops. I think we are in line for wave C pretty soon. And the initial target for wave C would be a break of hold on now, let's get would be a break of the wave A low here, so that would be a 2165. So we've got again a very attractive pattern at the moment within wave C, and it's going to take something significant to break that pattern. I think we need 5 waves down. I think at that point I will be a screaming bull for silver. I'm just not there yet. Okay. Move on. Okay. On the short-term count in Bitcoin, you could call this. Let's get the 4-hour count here. A wave 3 and 4 pattern. So this could be a 3rd and a 4th wave completed. You could go 3 down in A, 3 up in B, and then 5. What we got recently, this 5-wave decline, could be a C wave. It will all depend on the rally off this particular low, even if we get a rally, that is. I will note that it's the first moving average crossover that we have seen since the late January. That time it was a false break. This time, let's see how that works out. On the short-term chart here, you can see that possible wave A, B, and C. Okay. Yep. I'm getting my call here. All right. This could be a wave 1 down or a C wave down. All right. I'm going to have to close the session there and head down as I got to run. Bless you all. Have a great weekend. Thanks for watching, and I will see the members on the website tonight. And bye-bye.